The new IG trading platform, fewer clicks, flexible layouts and time-saving settings, split charts across multiple timeframes and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.
Good morning, I'm Chris Beach and welcome to Charting the Markets on IG Live. And a day after this disappointment regarding Brexit talks, we have further news dominating to see whether we have any further progress coming through over the next week or so. Remember, the UK and the EU have about another 10 days or so until the European Council summit next week to agree some kind of deal. It still looks as if one will be done, and that is helping to support sterling this morning. We did see the currency drop below 133 against the US dollar, but bounced back above, helped by a slightly mixed services PMI reading. The headline number was weaker, but if you looked at the prices index, the sub-index that showed the price growth, that is now rising at its fastest rate since February of 2008. So that imported inflation on the back of sterling weakness really beginning to have an effect, and that's bolstered the pound on expectations that maybe the Bank of England will have to revise its forecast for inflation and hence might be slightly closer to an interest rate rise or another interest rate rise than it was a few months ago. So that's also, of course, putting pressure on the FTSE 100. We did see it nudging back above 73.60 in the course of the very early part of the session, indeed in the pre-market, but it's been knocked back once again. Similarly, in Europe, the DAX trying its best to rally, but that index stuck in consolidation. And these issues for European markets come in stark contrast to the US. Now, of course, the Nasdaq has taken a bit of a knock this week. Sector rotation, the idea that people are moving out of tech stocks into things like financials and other stocks likely to benefit not just from tax reform, but continued economic growth in the US specifically, rather than, say, broader economic growth and, of course, the growth idea that those social media stocks have. That's why you've seen the Nasdaq 100 take a bit of a knock, although it's still in one of the strongest uptrends we've seen in recent history. But US markets as a whole still very, very close to recent all-time highs, and the same cannot be said for Europe. So interesting dichotomy coming across as we move into, well, the middle of December will be upon us very, very quickly. And usually you get a bit of a bounce at the beginning of the month, then a drift sideways for the big stock market indices, and then, of course, the rally. Historically, the Santa rally, as it's known, tends to start towards the end of the month. And there's a piece on the IG website for those of you who are interested in that potential topic. Let's start with the FTSE 100, the indices space this morning. The FTSE currently holding its ground at 73.43, but it is at least moving further and further away from the lows of last week, down below 72.94. So this is the price section here. You can see you've already had stochastics trying to move higher. MACD similarly still bearish, but it could be about to, in due course, it could shift high if we do get further gains in the price. The problem for the index at the moment has been this area around 73.60. That was an issue yesterday. It was an issue again this morning, and that mirrors what we had in the middle of November when we tried to break that to the downside, and it provided a reason, a potential area of support. Now, having been broken last week, support once broken becomes resistance, and that's what you're seeing at this point in time. You do have potentially there's your first higher low coming through here, so you could argue that actually there is something of an uptrend developing, but it has been a very tough time for the FTSE 100 and for its longs. We thought we were on the cusp of improvement last week up at 74.60, and then all this sterling strength is really beginning to weigh on the index. But at the moment, if it does maybe drop back towards 73.20 and then find buys, you could argue that continues to be a rising trend, even if it's not quite a strong one. And you can certainly see that that would suggest that actually we will see gains from this point onwards. It has been a rather difficult time, and you certainly do have that we can get rid of that downtrend line. But this one, you can argue that's your next one to watch out for. There was the start of it. There's your first lower high. So really, to be sure of a breakout here for this index, we need to see prices about 100 points higher than we are now. So quite a lot of heavy lifting to do for the bulls. Don't forget, though, it is the strongest month historically for the index is December. It's also the quietest month which tends to reinforce the idea that actually we will see further gains, even if they don't quite get back to those record highs from where we nearly got to them in November, but the one goes all the way back to June at 7,600. But a slightly mixed performance once again so far for the index this morning. The DAX is having a bit of a problem as well. And for this index, it's really a case of broader consolidation in a wider trading range than a case of an outright rally, as you are seeing in US markets. Now, the bottom end of this range continues to be bounded by 12,850, that kind of area. 3 times, as you can see on that chart there, 3 times it's tried to break or head towards it and go below it, and 3 times it's bounced off. So that's a good sign, at least for the time being. But you can certainly see that at the moment, and it pushes up towards 13,100 over the last couple of days, and then up towards 13,200, do tend to act as catalysts of selling. So again, European indices really having a tough time at the moment. And for the time being, we've still got a decent range to watch for. So your first area of possible support around 12,950, and then around about 100 points lower from there. A breakout down there would be a relatively bearish development, and then you've got further support 12,678. And then to the upside, if we stick with this daily chart, you can just see we need to get back above 13,200 to really get a good bit of a move towards the upside. European markets just coming under a bit of pressure once again. December is a very strong month for equities across the board, so we're not ruling out the chance that this is just a bit of a short-term period of weakness before the December rally, which starts in the latter half of the month, before that really comes in earnest. But at the moment, it is undoubtedly a tough one for the longs in this space, and the range traders in the DAX certainly do have the advantage at the moment. If you are looking maybe to go on towards the short side of things, we are sort of in the middle of that range, so you might have a bit more downside towards 12,850, and then it might start to bounce from there once again. Otherwise, if you're looking to buy, that would be probably the place if this weakness we're seeing this morning does get a bit more traction over the next couple of days. And then with the Nasdaq, just a bit of a change, because this is the one that's actually seen quite a lot of movement to the downside for a change. The Dow and the S&P hit record highs last week and then nudged, I think, a few more yesterday. Whereas the Nasdaq just seeing a bit more of a deeper retracement. This was Josh's trade of the week. It hasn't worked out spectacularly well, but that's within well-defined risk parameters. But if you look at the broader outlook here, still one of the strongest uptrends we've seen. And certainly this is the first real retracement since the middle of September, really. You can see there that we dropped back towards the 100-day. That was another 3% drop. So far, since last week, we've seen about 2.8% wiped off the index. Oh, the panic. You might get just a bit more downside here, but really I think it continues to be the case that dips remain buying opportunities here, and it might be that we'll see that develop over the course of time. 6,015, one potential area of much broader support, but what we're definitely watching at the moment, just delete this ruler, what we're definitely watching at the moment is this low, 62.29. This is the Nasdaq 100, don't forget. That's the area of support to watch for. Otherwise, if it does go below there, then you've got the potential for a deeper retracement. But it has been quite a volatile period for this index over the last 2 or 3 days, but it's by no means certain that we've seen the end of this rally. I think we should be careful getting too bearish on this one for the time being. And we've had a bit more European services PMI this morning coming through, just a touch weaker on some of the numbers, but overall still very, very strong performance. And that's helping the euro to maintain its poise this morning. The uptrend from the November low still intact. And again, we're just watching for these sequences of higher lows, and that's exactly what we've got so far this morning. You can see there that we've seen support develop around the 118.36 area, 118.58 also moving, providing some support. Just stuck below this 50-period moving average, also that level at 118.80. But really, we're looking at a move back towards 119.50, I think, over the course of time. Those services PMI numbers this morning, and a bit of dollar weakness really doing its bit to keep the euro moving higher. As you can see, though, the broader trend seems to be reasserting itself. We've lost this strong trend line from the beginning of the year, but after this dip down towards 115, it seems to have recovered and looks to be moving higher. But there's just a little bit of work to do to get back above 120. But for the time being, the buyers seem to have the upside in this currency pair. What is on the move this morning is the pound against the US dollar. Now, ostensibly, of course, I think yesterday's Brexit news really did cause quite a lot of concern. There was an expectation that we would see a deal of some sort come through. That was the sort of tone coming through from EU and Irish officials, and then suddenly it all fell apart in the course of the afternoon. This is, of course, classic European Eurozone crisis playbook, where you see hopes of a deal then dashed, and then at the last minute, which we've got another week of this to go, at the last minute they announce a deal. But what is helping the pound this morning was an improvement in the rate of price growth in the services PMI this morning. Although the headline number, as I said, was weaker, prices rose at their fastest rate since February of 2008, and that provided reason for the buyers to step into FTSE 100 once again. Now, it's interesting because it's just trying to break through this 134.27 area, which acted as support during the course of yesterday's session. And again, as we've been saying, when you break support, it becomes resistance, and that's exactly what we're seeing played out here. So a little bit of a bounce from oversold levels, but we'll see if we can get back above there. Otherwise, if not, we're looking for a move back down towards 133.41 and indeed 132.68 over the course of time. And dollar yen also very much in focus, because it has been, it was a very strong bounce from the lows of November. We got back above the 200 period moving average last week, but then we got to the 50-day moving average over the course of the weekend, and then it's dropped back once again. So do be careful about this one. It looks as if the sellers might be trying to push this one back down, and indeed from the price action intraday, it looks as if that's what we're seeing at the moment. Now, the rally off the lows here continues to produce a series of higher lows. So until we see it back below 112, or indeed 111.85, then we still have those higher lows in place. So it's just a tough one at the moment, rolling over quite nicely though. So it could be that we see a push down towards 118.85, and if that goes, we're headed back towards the lows from last week, the beginning of last week, at 110.82. And we just continue to watch to see whether gold can actually try and move higher. It's been a very tough time, if you remember, for gold longs. We've seen it knocked back towards 1270, but it is holding that line once again. You can see currently trading 1276. Spike higher yesterday, or rather, sorry, on Friday, and then sharply knocked back again. We're just trading in this very, very tight range, up towards 1276 and down towards 1270. So watch for a break of that to the upside. If it goes higher, you've got 1284 coming into play. Otherwise, 1295. Beyond that, 1264 is your one to watch for. There's a lot of support coming through there. That was the case. We've lost, well, we sort of lost this sequence of higher lows just about, but we are holding that ground at 1270. So that's your line in the sand, I think, for longs. If that does go, you've got a bit more downside to go on this one. US crude continues to undergo another dip. The disappointment with the OPEC meeting, really no real change. They continue to extend their production cuts into 2018. Some support coming through around this 100 period moving average, $57 a barrel. You've got plenty more support though to the downside in what has been a very strong trend though, 55, 67, 55 and then 54. Any turn higher and you've got this interesting area of resistance around about $59 a barrel, not just from Friday's high but just above it, the high from the 24th of November. And from that point onwards, if that does go, just go back to the weekly chart, 62.56 is your next one to watch for. So we have US trade balance data out this afternoon as we head towards, of course, job numbers later in the week, ADP payrolls tomorrow, and then non-farms on Friday. We continue to watch for any further news out of those Brexit negotiations. That's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.
The new IG trading platform. Fewer clicks, flexible layouts and time-saving settings. Split charts across multiple time frames and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.